Good morning. We are going to get started with our PPAR 7-day look back for December 26th. Good morning, Jordan.
Good morning.
Merry Christmas. Day after Christmas.
Merry Christmas.
Yeah, last day that we're going to have all the decorations up for these calls. So hopefully, if I can get some help taking them down. All right, well, let's talk about the numbers for the last week. No surprise, numbers are low. Let's dig into it. I'll read through them here for you. All right, December 26, 2023, new listings on the market, 63 over the last 7 days. 63 listings. It's the lowest number that we have ever seen in a weekly since in the 16 months that we've been pulling these numbers. That's the lowest number we've ever seen, 63. 515,000 average, 440,000 median. Pendings and under contracts, 150. 508,000 average and 445 median, 58 days on market. Sold properties 126, which is actually up from last week. I guess people sprinting to the finish line before the holiday probably has to do with that. 475,000 average, 450,000 median. And then withdrawn, expired, canceled, 53. That number's down, the lowest we've seen in a while. But what's crazy is that with the low amount of properties coming on the market with 63 and 126 leaving the market for good plus 53, we still had 112 decrease in inventory week over week. And that's the biggest drop we've seen in a really long time. So our 4-week inventory decrease is 314. That is the highest 4-week change up or down since we've been following this trend. So in the last 4 weeks, we've had more properties leave the market than we have ever in the last 18 months seen come onto the market or leave the market. Biggest 4-week change that we've ever seen, 314 down. And if you remember from the team meeting last week, I talked about how gravity in a market, regardless of what kind of market it is, real estate market, financial market, currency markets, commodity markets, all of it, gravity plays a stronger role than upward momentum. So what I mean by that is that things fall faster than they rise. And inventory right now is showing that to be true, that it is just falling off a cliff. That may be overstating the situation. It's not falling off a cliff, but it's coming down faster than we've ever seen it. We've now, as of last week, we had erased 5 months worth of inventory accumulation in 4 weeks, and I think that we have to go back further. We have to go back even further than that now to get to 1744 on the market when we were at like 2200 just a few weeks ago. So, but that's good. That'll help price discovery, certainly. Okay, when you look at, and I'll go full screen so that this gets recorded full screen. When you look at the 1 year, 6 month, 4-week averages that we have here, these are, obviously looking back further than we have on the screen. And then we get into the comparison. So 6 month versus 1 year, honestly, we're about even, 6 month versus 1 year. And it's crazy because it was only a month ago when the last 6 months still had all of this activity that it was reporting over the 1 year. But we've kind of caught up to that. And the 6 month versus 1 year is we're in that season, we're in that part of the year where it's going to be a little flat when you compare the 6 month and the 1 year trends, because we're at that seasonality of the market, and it'll actually, the 6 month will actually start getting negative compared to the 1 year. Anyway, it's not that important to talk about today. 1 month versus 1 year. These next two, the 1 month versus 1 year and the 1 month versus 6 months, is where you see the changes in the market. And I'm going to show another thing in just a second to illustrate this even further. But you've got about 40% fewer listings coming on the market over the last month as compared to either the last year or 6 months. 40% fewer homes coming onto the market, 40% newer listings. At the same time, when you're just looking at the 1 year, you've got 30% less homes going under contract over the last month as compared to the last year. These are all, I mean, you can use these talking points certainly with the client. 40% reduction in new listings. You can go to a seller client and say, hey, great news, inventory has fallen really quickly, and so you will have far less competition, and here are even the properties that have left the market in your neighborhood. So you have less competition in your neighborhood, you have less competition on the market because there are 40% fewer properties coming onto the market right now. Now, you don't necessarily need to get into the, they're also coming on the market at about 6.5% less than what they were. But just the number by itself, it tells a good story. Pendings and under contracts, you can do the same thing for a buyer. There are 30% less properties going under contract right now than there have been over the last year. There's less buyer activity in the marketplace. As interest rates have started to come down, sellers are getting a little desperate. There's less buyer activity. That means more negotiating power for a buyer. That's a great, great talking point to take to your buyer. 30% less buyer activity. Yeah. And then over the last week, it's just the activity being really, really down is highlighted even more. Okay, I want to show this next slide. This, I think, is where this illustrates really well. So the 1 month versus the 12-month trend. This is week over week going back into mid-October. And so you can see here new listings, the very first column there, new listings in mid-October were up 13, almost 14% over the last month compared to the last year. And as you look at that trend, even just graphically, you can see how it turns from green to white to pink to now dark red. And we're still trending down. We haven't found the bottom yet. I think that we're probably very, very near the bottom of these numbers. We haven't found the bottom yet, though. And when you look at pendings, same thing. Like pendings have just continued to go down and down and down and down. Sold properties as well, the percentages. So I have highlighted there the sold property prices and how you can see in mid-October, our prices were still up 5% on average, 3% on median, 3.5% on median. And over the last 10 weeks have dropped negative now in those sold prices. When you compare that to the price of new listings, sold prices obviously trails new listings by between 6 and 10 weeks depending, and the new listing prices are down 6, 7, 8%. Sold prices are only down 2%. And if you go back 6 or 8 weeks, you can see the same ratios reflected in new listings that are currently reflected in sold prices, which would lead us to believe that sold prices are going to continue to come down at the same rate and ratios that we've seen new listing prices coming down over the next few weeks, which is something to keep an eye on. That could correlate just about perfectly with the bottom of the seasonal market being sometime in February or early March. Could correlate really perfectly, which would be seasonally very normal albeit that would make the cascade from the high of last June to the low of late February a pretty significant number, like maybe even upwards of 15-18% of a decline over that period before things start picking up again. So interesting to keep an eye on the way these numbers stack up and work together and kind of can help us predict what's going to happen. Obviously, if inventory keeps coming down, that may happen sooner. We may bottom sooner because when supply goes down, obviously demand goes up and price goes up. So in some ways, the really rapid decline in inventory is actually helping, dramatically helping price discovery and keeping us from falling off the cliff with prices. Whereas if inventory was still going up right now, that would be a pretty terrifying reality looking into the future. If inventory was going up while prices were continuing to go down, that doesn't seem to be the case. Inventory is now going down, so that's good. Okay, let's look at interest rates for a moment. Pretty unchanged over the last few days. No surprise there. This is all driven by market conditions, and markets are very slow or possibly not even open, right? I mean, today they are, but very slow market days. Hovering mid to high sixes, government low sixes. Pretty reasonable place to be. Pretty reasonable place to be, especially with the expectation this is going to continue to ease over the coming months. So interest rates, I think, will be less of a conversation, which is pretty cool. I mean, our market has been dominated by that for the last 18 months. That's in fact why we started tracking these numbers so closely, is because of the impact the interest rates were having on our market. And that is going to be less of the conversation over the coming months. And the conversation will shift likely to be more about overall economic stability rather than just interest rates, and the way that is impacting markets, financial and real estate combined. But more interest rates are with that expecting to come down into the 5s, maybe eventually into the 4s this time next year. It'll be less of a part of the conversation, and that'll be great for our clients overall. So in recap, we've got low activity over the last week as expected. Prices continuing to come down, inventory continuing to come down, and we're going to see that happening for at least another month. Inventory continuing to come down pretty significantly. We've got, this time next week, so this same time block, this same report, will kick off our 2024 production next week. We're going to go through these numbers. We're going to look at withdrawn, expireds, and canceled. Just expireds and canceled. And then we're going to jump right after this call into some script practice, into some logistics about how to talk to expireds and canceled. We're going to pull some lists over the last 3 months, and we'll probably have 500 to 700 properties on those lists, and we're going to divvy them up in the room and all jump into production calling expireds and canceled. We do expect, based on how much inventory we have on the market, I expect somewhere between 150 and 180 homes expired and canceled next week at the end of the year. That's always the biggest. December 31st is the biggest cancellation date of listing contracts that we see. And based on where our inventory is right now, 150 to 180 is what I'm projecting. Last year we had 215 that left the market on December 31st. I expect we're going to see a little bit less than that because of where inventory is. But it is going to be a main focus over the next few weeks, helping people really jump into activity and production around expireds and canceled. because I think it is going to be a huge opportunity to set up your spring inventory by building those relationships now and presenting the relevant information that we've been tracking to these clients so that they trust you, they trust your assessment of the market, and while they've already expressed they want to sell, they believe that you are the one that can actually help them sell. And so that's what we're going to be focusing on next week, January 2nd, the first business day of the year, when we look at these numbers and specifically looking into expireds and canceled. That's all that I have for today. Appreciate the attendance and hope you have a great day out in the field, and we'll see you soon.
Thanks, Chris. Bye.
Yep. See ya.